The same bank charges you $35 for being $1 short. But if you have $1 million, they'll waive that fee without you even asking. The only difference between you and them is how much money you have. And the bank treats you completely differently because of it. Hey, before we dive in, I gotta be clear about something. I'm not a financial advisor. Everything you're about to hear is purely educational content. Banks like to pretend they're neutral institutions. They exist to help everyone manage money equally. That's a lie. Banks have literally created a two-tier system where poor people and rich people get opposite treatment for the exact same behavior. And the crazier part? This is all perfectly legal. It's built right into how banking works. Let's start with overdraft fees because this is where the inequality hits hardest. You're short by $1, your debit card gets declined at the grocery store. It's humiliating and it's frustrating. Then your bank calls or you check your app and you see it. They covered the transaction. They charge you $35 for that $1 favor. Now imagine you're a millionaire. Your checking account has $1 million in it. Your investment portfolio is worth $5 million more. You make a mistake. You overdraft by $100 for a day. What happens? Nothing. The bank waives the fee. They don't even charge you. Why? Because you have money. You're a profitable customer. They're not going to risk losing $1 million relationship over a $35 fee. This is the core of how banking works. Poor people subsidize rich people. The less money you have, the more you pay. The more money you have, the less you pay. This isn't accidental. It's the entire business model. Let's talk about interest rates next. You want to borrow money. The bank looks at your credit score. If it's low because you've struggled financially, they charge you 15, 18, maybe 25% interest. They're hedging against risk. That's their excuse. Now a rich person wants to borrow. Their credit score is excellent because they've never had to struggle. The bank charges them 3, 4, maybe 5% interest. Same bank, same product, completely different price. The rich person is actually less risky to lend to. They have assets, they have income. So yeah, they should get a better rate. But here's what's insane. The poor person is being charged more money precisely because they have less money. It's a system that punishes poverty and rewards wealth. And it compounds. The rich person borrows at 5% and builds more wealth. The poor person borrows at 25% and falls further behind. But it gets worse. Let's talk about investment accounts and wealth management services. If you have $100,000 to invest, most banks will ignore you. You're not worth their time. They don't have special investment advisors for people at that level. But if you have $1 million, now you get access to a wealth advisor, a person who manages your investments personally, someone who calls you with opportunities, someone who helps you structure your finances for tax efficiency. That advisor isn't doing anything magic. They're just helping you think about money strategically. But for most people, this service doesn't even exist. For rich people, it's free. The bank makes money off your investments because they manage a percentage of your assets. So the rich person who has $1 million generates serious fees. The poor person with $100,000 generates almost nothing. So the bank invests resources in the rich person and ignores everyone else. Then there's credit availability. You want a credit card. If you're poor, you get a card with the $500 limit and a 24% interest rate. If you're rich, you get invited to apply for a premium card with a $50,000 limit and 3% interest. Same company, same credit card product, different treatment based entirely on how much money you already have. Here's what really gets me though. The fees that banks charge poor people are often deliberately designed to trap them. Overdraft fees stack. Miss one payment and suddenly you're hit with multiple fees. Now you're so far behind that catching up becomes nearly impossible. You fall further behind. You miss more payments, more fees pile up. Meanwhile, rich people have overdraft protection. Automatic transfers from savings accounts. The bank literally prevents overdrafts from happening so they never get charged fees. It's almost like banks have engineered a system where being poor costs extra money. Because they have, think about it from the bank's perspective. A poor person with little money is riskier and requires more resources to maintain an account. They're more likely to overdraft, which requires collection calls and administrative overhead. They don't generate much profit. So the bank charges them fees to make up for it. Overdraft fees, account maintenance fees, low balance fees. These charges offset the cost of serving them. Rich people, they make money for the bank through investments and lending. They generate profit just by existing as a customer. So not only do they not get charged fees, they actually get perks, cashback on credit cards, points on travel, invitations to exclusive events. The bank is essentially paying rich people to stay with them while charging poor people for the privilege of banking. This is structural inequality baked into the financial system. It's not a conspiracy. It's how capitalism works when you're dealing with institutions that measure value in dollars. If you're poor, you're expensive to serve and generate little profit, so you get squeezed. If you're rich, you're cheap to serve and generate massive profit, so you get treated like royalty. The same bank building serves two completely different populations with two completely different standards, and most people never even realize it's happening because they're too busy trying to survive to pay attention to the system crushing them. If you want to understand how to move from one side of this equation to the other, how to actually escape the poverty tax and start getting the perks that come with wealth, hit subscribe, because this system is designed to keep you where you are. But knowing how it works is the first step to changing your position in it.